Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we are going to cover AT&T. Let's jump right into the video. As I said, AT&T, it is out of the communication sector. AT&T has been around for a long time. They are a 5G phone provider, internet provider, wireless, direct TV streaming services, again, home phone if you still have a landline, and home security. They offer, as well as retail stores as well to sell their phones and other products. AT&T has been around for a long time, maybe one of the older communication providers out there. If you want to know more about them, www.att.com. Again, AT&T, ticker T, out of the communication sector at the close of business on July 6th, $21.09, down 0.38% on the day. We just call that relatively flat. They have a 52-week range, a low of $16.63, a high of $21.96. And this is actually after their split. They had a stock split here recently where they spun off Warner Brothers Media, a portion of their business that they had actually acquired here a couple years back, or several years back now. They tried to get into the streaming space, and then they spun that off to go back to more of the communications specific sector. So a market cap of $150.983 billion, a beta of 0.73, so less volatile than the overall market, just slightly. A PE ratio extremely low, 8.82. They have a forward dividend of $1.11 paid out quarterly. So divide that by 4, that'll tell you what your payout is. A nice dividend yield at 5.24%. And that's actually even nice even after that drop. That used to be around 8%, but when they did the spin-off, it actually dropped down a little bit, but still at 5%. That is a 5.24%. That is a very nice payout. Their ex-dividend date, July 8th, so coming up. So actually, if you bought them tomorrow, you would be in line for, or today, if you happen to buy them, you would be in line for the next dividend. If you buy on the ex-dividend date or after, you would not. So you would need to buy tomorrow to be able to be in line for the next dividend. And according to Yahoo Finance, I'm not affiliated with Yahoo Finance, just where I like to post some information. They have a one-year target estimate of $23.23. So it might be up against the high here for what they're projecting, but some stock price appreciation. Then you can see the volatility. Looks like it dropped down below $21 at one point today, but ended at $21.09. Up a little bit in the after hours there. And according to the stock analysts who have taken a look at this, 37 stock analysts that have taken a look at it, they call it a buy, but really it is right on the edge of hold and buy. So I would say I would be more inclined to say buy if it continued to dip, but more hold if it stayed at this range. I do personally own AT&T. It is in my portfolio. I have over 150 shares. I was buying them before the spinoff. They have a low estimate, one-year target of $14.14, so speaks to potential negative decline, continued decline, and that would be a 32.95 decrease in stock price from where it currently sits. They have an average price target of $23.80, which would be 12.85% increase in stock price. And if it happened to hit the high, $38.85 over the next years, that would be a 84.21% stock price appreciation. And while you waited for that to hit that 38 high, you'd be drawing in that 5% dividend yield. If it hit this $14 low, that yield would obviously shoot way up. And again, maybe one to watch, see if it pulls back. I have not been adding to AT&T. I'd love it down, below $19. I think that's my cost basis. So if it happened to hit below that, I might look to add. But currently where it sits, it's one I'm more on the hold side than on the buy side. These are quick hitters, trying to look and find value in the market where we can, when we can. Pretty volatile market, continues to be volatile overall. I still believe we're in a bear market, still believe we have some downside pressure, in my opinion. Looming recession, if we're not already in one. I believe we've been in recession since 2019, but that's just one person's opinion. You take that with a grain of salt and do your own research. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up button, ring the notification bell, subscribe to the channel. That's the most important. And if you hit that like button and subscribe, it really helps out a small YouTube like me. So take a second to do that. I would really appreciate it. It doesn't cost you a thing, and it really helps myself, the small channel that I am, with the YouTube algorithms. The more you like and subscribe to the channel, as well as dropping a comment down below, that really helps as well. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future videos, or constructive criticism. Tell me what I can do better. What stocks are you interested in seeing me review? I'll take that in consideration. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. We'll see you next time. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria. Or seek the advice and counsel of a certified financial advisor.